Welcome back to The Vault, where we unlock stories that matter here at FNBO. I'm Amelis, and I'm so excited to be your host for another great episode today. This month, we're celebrating something really important to FNBO culture, National Agriculture Month. And as the third largest commercial ag bank in the United States, this is something that is really part of who we are. So to help us get to know a little bit more about agribusiness, I'm so excited to welcome our expert, Mr. Barry Benson, head of agribusiness at FNBO, to the podcast today. Welcome. Thank you for being here.
Yeah, thank you, Amelis. I'm super excited to be here. Appreciate the time.
First of all, I think we should say Happy Ag Month.
Absolutely. It's the most wonderful time of year.
I'm excited to learn more about it. Well, Barry, tell me a little bit about some interesting facts in the farm industry.
That's a great idea, Amelis. Let's first start out with a question on what percentage of U.S. family farms do you think are family owned and operated?
Well, first of all, I didn't think you were going to interview me today. Percentage of family-owned farms. Let's say 75?
That is a great guess, but it's actually around 90%. 90% of U.S. farms are family-owned and operated, many of which are their third and fourth generations leading the business. The average farm is producing enough food for 165 people in the United States.
Wow.
Yeah, absolutely. Back in around 1960, that number was as low as 25.
Wow, that's huge. I didn't know that much about farming, let alone family farms. It's amazing.
Absolutely.
I feel like you have another question on deck for me.
Yeah. What do you think would be the most produced farm product in the United States?
I'd say corn.
You are exactly right.
Yes.
Corn remains king in the United States.
Okay.
Actually, corn is included in around 4,000 items that you'll be able to see at your grocery store, some of which include gum, pop, and another fun fact, paper is also actually made out of corn byproducts of corn stalks, cobs, and the actual corn husk.
That I didn't know, but I love pop and gum, so I'm all for the corn industry.
Perfect. You and I both. So absolutely. Corn is also used, a strong product for ethanol. One that's a little more new and which is hitting the market too is biodiesel for the soybean side. Finally, Amelis, one last question.
Okay.
How many states do you think there are where cattle actually outnumber the number of people in that state?
Okay, so more cows than people.
Mm-hmm.
I'd say 5 states.
There are about 9, and of the highest ratio of cattle to people would actually be South Dakota would lead that, then Nebraska, and then North Dakota would actually come in number 3.
Okay. Staying strong in the Midwest, though.
Absolutely.
All right. Well, I feel like it's time for me to start interviewing you after this little game here.
I kind of liked asking you questions, but sure, go right ahead.
It was kind of fun to have the role switch for a little bit.
For sure.
Well, now that we learned a little bit about cows and people, let's just dive into the cattle industry. What else do we need to know about it?
Yeah, absolutely. It is interesting times in the cattle industry today. So right now, the U.S. cow population is at about a 70-year low. So we have fewer cows producing calves that will then eventually end up in the food supply chain. At the same time, the U.S. consumer has really taken a strong liking to high-quality beef. So the demand for the product is actually increasing at the same time, which ties into the classic supply and demand curve. And so as there's less supply, then unfortunately the prices do increase on that. The reason the cow herd is down, there's a lot of different variables that come into it. The United States has experienced drought in the last 3 to 4 years in different spots of the United States where cow numbers typically reign in the south and southwest and a little bit into the north and northwest as well. And at the same time, a few years ago, grain prices were pretty substantial. And so there was some pasture ground that was for cow-calf and now is potentially in row crop production. Some of the decline in cow numbers is being offset by dairy cows. So there's more beef on dairy that is entering the supply chain today. And in addition, cattle used to be finished or harvested at a weight of around 1,200 pounds. Today, that is typically around 1,500 to 1,600 pounds. So it takes fewer animals to actually supply protein for the U.S. consumer. But while that consumer is chasing that high-quality product, we are experiencing some increased prices at the store.
Yeah, I've definitely have felt that in the grocery store.
Yeah, we all have. And so the U.S. producers and ranchers are trying to increase that, but at this time, it does take a little bit of time. And so if they go through to increase their herd, they would need to retain heifers. So if a producer would retain heifers this year in 2026, those cows or heifers would not actually calve until 2027. And then that calf would actually not even hit the food supply until late 28 or even early 29. So I myself am a producer as well. And so in my operation, I'm weighing the opportunity cost of being able to sell that heifer this year at a very good price, which would be profitable for me. Do I retain her? Do I put in the extra feed, cost, and labor to get her to next year to where then she could calve? Many producers remember 2015 and 2016 coming off one of the other high cycles of the cattle cycle. And unfortunately, at that time, a lot of people retained heifers, and then they were actually worth less with a calf than they could have sold as a feeder calf. So although the producer is trying their best to really help the consumer and not pay so much at the store, it will take some time. But just be rest assured that the U.S. producers are really trying.
Yeah, that's really good information, and it's such a science, right? And I think as a consumer, we just look at the price tag and say, "Man, I need a coupon." But
Yes.
it's so important for us to know like how it all really works, and I think also remembering it's a family-owned business, right? And so all that connectivity is really important for us to understand.
Yeah, absolutely. There's a lot of blood, sweat, and tears put into trying to raise that animal to eventually end up at the grocery store for the consumer to purchase.
Yeah. Yeah. Thanks for sharing that, Barry.
Yeah, you bet.
I want to pivot a little bit. Let's talk about another part of the agribusiness, which is I think you called them row crops, or actually things we're planting in the ground, right?
Yes, absolutely.
Yeah. So you were telling me as we were chatting before the podcast that that's been a kind of a tough spot where the prices are not matching the cost that it is to plant. Can you explain that to our audience?
Sure, absolutely. So in 2026, it is projected that the input costs, so the costs that the farmer has to pay for the seed, fertilizer, chemical, labor to actually get the seed in the ground to then grow to be harvested later, is going to be at or near an all-time record high.
Mm-hmm.
So that is a little bit of a headwind for our producers. At the same time, unfortunately, the last few years we've had declining grain prices. So that's the price that the farmer is receiving after they harvest the crop and then take it to the elevator or further food processing.
Mm-hmm.
And so as those two things have crossed, it has been a challenging time over the last few years in row crop. And so mentioned a little bit earlier how I have cattle. I also have a farming operation. And so other little interesting fun fact, my dad, his first job out of college before he went back to the family farm, he was an FFA advisor. And so FFA was very near and dear to my heart and my dad's heart as a young age. And so I was an FFA in high school. And one of the things of FFA is you learn the FFA creed. So one of the things in the FFA creeds states that, "For I know the joys and discomforts of agricultural life and hold an inborn fondness for those which, even in hours of discouragement, I cannot deny." So today's men and women in agriculture are really working hard in row crop to really try to figure out the best way that they are able to lower their cost, control those costs, I should actually say,
Mm-hmm.
and then also look to try to market it and opportunities that come available. So they're really busting out their pencil sharpeners, looking at everything with a fine-tooth comb,
Yeah.
and really trying their best to figure out how to maintain profitability this year if they can.
Mm-hmm.
It has been challenging. So at FNBO, we do work with our customers to make sure they do have strong balance sheets, have ample working capital, and their ratios are in line to be able to keep them successful. Unfortunately, after 2 years to potentially this could be the third year of being a little bit of a challenge, some of that working capital has eroded. So we work with them to look to say, okay, fortunately, ag real estate land values still remain very high. And so is there a way to offset some of that short-term debt into a long-term plan, which makes their cash flow a little bit easier and help keep them in operations to really be successful in the future?
Wow, Barry, I keep coming back to the fun fact you shared at the beginning: 90% multi-generation family businesses trying to really manage the ups and downs and these intricacies that as a person that just goes to the grocery store to buy their stuff, you're just not familiar with.
No, absolutely. There's a lot behind that, and
Mhm.
it just doesn't show up at the grocery store aisle for a consumer to be able to pick up. They're not only just in our rural communities, but spread throughout the entire United States.
So what is something consumers, in addition to understanding how the system works,
Mhm.
what else can they do or can they understand about agribusiness so that maybe we're not griping so much at the grocery store?
I think for the consumer side, we just want them to know and understand that it does, as I guess indicated before, it just doesn't just show up in the aisle.
Mhm.
There is a lot of things that happen behind that. Everybody is trying to produce the most that they can to provide for the U.S. consumer as well as around the world. And so it is a global economy today. So the production that is happening by the U.S. farmer is not only consumed by the United States, but also sent abroad. And so we had been operating at a surplus for ag trade over the last number of decades. Unfortunately, a few years ago, that did turn. And so today we actually import more ag products than we export. And that can be due to a lot of different reasons, which I think we're making some progress there. But today is just a little tougher time on the row crop side.
We've talked a little bit about the consumer side. I kind of want to pivot to the customers that you do support. You've touched on how your team works so closely with your customers to help them plan, not just in the moment, but also long term. As we look into 2026, what are some things that you want your current customers or potential customers to understand about the market, interest rates, and things like that?
Interest rates have been on the downhill slide here over the last 6 to 18 months. Really backtracking all the way to 2020, the rates almost went to zero. Certainly lower rates than they are today. And then we had a certain time period where they were rapidly increasing at 75 basis points at a time. And so, in order to control inflation, then the Federal Reserve started raising rates, which certainly impacted our customers. And as we talked about beef earlier, with cattle prices being the way that they are, it's really adding up to almost twice the amount of dollars it takes to produce an animal all the way to harvest. So with that increased cost, that also increases what their overall interest expense are on those borrowed dollars. So for every reduction in rates there are, that certainly impacts their operating costs and helps lower their cost of production. And so at FNBO, we certainly know that ag is cyclical. So there is ups and downs, just like a lot of different industries. Sometimes ag has a little longer headwinds up and sometimes a little faster downturn. But we do know that it just isn't always rainbows and sunshine all the time. And so when we work with our customers, we do encourage them to maintain strong liquidity, make sure that they are looking out beyond just 1 year, being able to make changes in their operation to be successful. So everything that they can do in order to efficiently produce a crop, and then look to the markets to be able to say, okay, when there's an opportunity to sell at a profit, let's take advantage of that opportunity and maybe not just hope that the prices will go higher, but be able to defend and make sure that we're able to produce for years to come.
Barry, it's really interesting to hear how you and your team proactively work with your farmers and producers. What are some of the solutions that you walk them through as you're doing some of that proactive planning?
Certainly right now we're in the middle of renewal season for our row crop producers. And so as we talked about earlier, there is some stress in that portfolio. They are seeing declining margins, which are making things a little more challenging. So as we look at our projected cash flows for 2026, we do have some operators that need to replenish that liquidity and working capital that we were talking about. And so we look for real estate loans or other items that they're able to offset those short-term operating losses with a longer-term repayment plan, which will then help ease their cash flow going into 2026. And so as we talked about earlier, FNBO is the third largest commercial lending bank in the United States, but we offer so many more things than just loans. And so we believe in bringing the entire suite to our producers and our customers. And so we offer top shelf cash management services. We offer credit cards. Diversified Financial Services is one of the leading equipment financiers in the United States, and actually the number one pivot irrigated insurer in the United States. And so we offer those type of solutions to also help producers. And then another interesting side note is FNNIC, our insurance company, also underwrites around 8 to 10% of the insurable acres in the United States. So there's a lot of different things that we bring to the bank, which makes me super proud and very excited about what we're able to offer to our customers. So ag is really not something that we do off the side of our desk. It's in our DNA. It's really who we are.
Yeah, it's definitely part of our culture. And I love hearing how that wraparound service is just really happening for those producers and farmers. Obviously, that's a huge piece of who we are and part of the opportunity that we bring to your customers. Let's talk a little bit more about some of those opportunities and the positive outlooks that you see for 2026.
Sure. Yeah. Wherever there's challenges, there's always opportunities.
That's right.
And so, as we look at 2026, we've talked about beef and protein, and so there could be a little more granular on those. So beef, we anticipate that continue to be really positive for 2026. The dairy industry, although milk prices are a little more challenging, the beef on dairy cross calves that we talked about earlier are certainly helping our dairy farmers with their cash flow. Swine is in a very good spot as well. So the projections for profitability for the swine industry in 2026 looks very positive. Even on the row crop, where there are challenges there, it does allow producers to have some thoughts and is there another niche market that they can try to be able to hit? Sustainability is certainly a buzzword today. And so they're looking for ways to be able to capture maybe that additional marketability to be able to generate additional revenue for their farm and operations. So all in all, we continue to be super excited about the opportunities for ag. The men and women of the United States farming families have, in tough times, looked to sharpen their pencil, figured out what is their best way to generate revenue, and leaned into that and always been successful.
And as a consumer, we're so appreciative that that's what they do.
One of the most enjoyable parts of my job and my team's job is to really, when we're working with the family farms, is to be able to sit across the kitchen table from them and really say, how can the next generation continue on our legacy? How can they grow on our legacy? And so that can come in a variety of different avenues for them. Some are looking to increase their livestock production side. Some are looking to increase the crop side. And many are really a combination of both. So the farm maybe was really specialized in beef production, and a son or daughter says, hey, I want to be able to continue on the legacy and grow. And so I may look at a different type of either bringing swine to the operation, bringing poultry to the operation, or maybe even some niche marketing where they will invite neighbors to be able to come out and experience a little bit about production and production agriculture. And so a lot of times we say farming is getting your hands dirty, but really farming is so much more today. It's almost a technology company where they're really looking to use modern technology to improve efficiencies, help with their record keeping, help with their overall production. And many times, similar to your podcast, we'll have farmers and ranchers that will have their own podcast and be able to share that message out. And that's a way for them to be able to expand their brand and continue on their family legacy.
Well, as we think about those opportunities, I can think of no better time than to celebrate our farmers and producers by wishing them a happy Agriculture Month. So what do we need to know about what happens in National Agriculture Month, and what are we doing to celebrate here at FNBO?
So here at FNBO on National Ag Day, actually on March 17th, we'll be serving coffee and donuts to our employees to help them also recognize and share more about the ag story so they can reach out to the men and women who are producing food, fiber, and fuel for us in the United States as well as the entire globe. So at FNBO, and really we encourage everybody to really reach out to those producers, thank them for all that they do. Food just doesn't show up at the grocery store shelves, and so there's a lot of effort behind that to get that product, which is safe, reliable, and very nutritious.
Thank you so much, Barry, for walking us through really everything we need to know about agribusiness. And as I reflect, I always enjoy going to the employee celebration and taking time to celebrate with your team.
For sure.
But I think this year will be even a little more meaningful now that I understand more about agribusiness. So I think we'll all make a commitment to thank our farmers and producers that we know. Thank you for the great work that your team's doing for all those folks that are helping us, like you said, clothe us, feed us, and keep us fueled. So
Absolutely. Well, thank you for the time. Thank you for giving me the opportunity to share. I'd like to thank the farmers and all the men and women who provide for us each and every day. So Thank you.
Yeah, absolutely. Big thank you to them. Big thank you to Barry. To learn more about FNBO and our agribusiness banking, please visit our website, fnbo.com/agribusiness. And if you've been enjoying our podcast, don't forget to leave us a review or share it with a friend. We'll see you next time on The Vault. The Vault is brought to you by FNBO, member FDIC, equal housing lender. Podcasts are for informational purposes only and not intended to provide specific advice or recommendations. When making decisions about your financial situation, consult a financial professional for advice. Podcasts are not regularly updated and information may become outdated. Deposit products are offered by First National Bank of Omaha, member FDIC. Investment products are not FDIC insured and not a deposit or other obligation of the bank. Not insured by any federal government agency. Not guaranteed by the bank and may lose value.